Okay, well, welcome to the latest in our Retire Abroad Virtual Roadshow webinar series. Today we're looking at the financial issues you should consider as you plan your retirement to Spain. Failing to plan can be very expensive, and although everybody's situation is unique and professional advice is essential from someone who is able to look at the consequences both in the UK and as well as in Spain, there are a number of general principles and detailed rules that you should be aware of. We aim to sort of make you aware of those today and the issues that you need to think about. I'm Nigel Ayres. I run Expat Network. I've lived in Hong Kong, Malaysia, and the US during my career, and lived actually in Spain for the last 3.5 years. We're joined by Brett Hanson of Blevins Franks, who will introduce himself in just a moment. But before we start, I just note that we're here to help and answer any questions you may have. So please use the button on your screen to put forward any questions, and we'll answer as many of those as we can during the session. Any that we miss, we'll answer by email after the event. We're also happy to introduce you to any of our panelists, such as Brett and any other service providers who can help you with your move. And you just need to drop us a line at expats@expatnetwork.com. Okay, so perhaps if we could start, Brett, if you could give us a little background on yourself and Blevins Franks.
Sure. Hello, Nigel, and hello, everyone else. So Blevins Franks started out in 1975. And basically what we do is we provide cross-border tax advice, estate planning, pension, and investment advice to British expatriates who are looking to move to Spain or are already living in Spain. We have 54 partners or private client managers who are fully qualified and regulated in each of their jurisdictions that they work in. And we have 20 local offices across Europe working in our core countries, which are France, Spain, Portugal, Cyprus, and Malta. We also have offices in the UK because invariably some clients who move to our European countries go back to live in the UK, and we can therefore provide ongoing advice to them as well. My name is Brett Hanson. I'm a senior partner of Blevins Franks. I've been with Blevins Franks for more than 20 years, and I've been based in Javier in Spain on the Costa Blanca for 20 years. And what we do from this office, there's 10 of us in this office, and we provide tax planning, estate planning, pension and investment advice to British expatriates who are either moving out here in the coming year or two or already living here. And again, we're all regulated and qualified to provide advice here.
Yeah. Okay, thanks, Brett. Well, let's start up. As people prepare to retire, their focus generally shifts, if you like, from building a retirement fund to optimizing their income to fund a retirement. And that's very typical of anybody, wherever they are. People moving abroad have sort of added complications, if you like. But what are the key issues that people should consider for their investment strategy as they plan their retirement in Spain?
Yeah, so I would say there's kind of 4 key issues there. The first one is obviously when people are retiring, they need to replace that income that they were earning, whether through employment or self-employment, and they need to replace that with income that's going to last throughout their retirement years, which leads on to inflation. Retirements now are no longer 5 or 6 years. People now retire for 30 years plus. And whilst inflation, up until recently, we weren't really talking about it, even inflation at 2 or 3% per annum can have a huge impact on one's wealth and one's income in retirement. And now with inflation much higher than that, that's definitely a factor that we need to take into consideration when people or our clients are retiring. And along with that is tax planning. So, typically when you're retiring in the UK, you look to take an income from pensions or tax efficient investments like ISAs, and likewise, you would need to do the same in Spain. But what you've got to bear in mind is the tax implications in Spain on your assets. And so it could be a case of looking at those assets before you move to Spain and restructuring those so that they're tax efficient, so that you can minimize your tax in Spain. And along with that, that would involve estate planning, because not only do you want to normally minimize your tax whilst you're alive and enjoying retirement, but you want to ensure that on your death, your loved ones, your partner, your wife, for example, minimizes their taxes, and that they have access to income and capital throughout their lifetimes, and then for the assets to pass to perhaps the children with a minimum of taxes in both Spain and the UK. So I guess the main issues there then is ensuring that you have an income which is sufficient and meets your needs, take into account inflation, look to minimize tax on your income and assets, and ensure that everything is set up so that should anything happen to yourself, your loved ones are protected and have access to your assets with a minimum of complications and taxes.
Right. Okay. So when people retire abroad, assuming they're moving here full time, they would cease to be tax resident in the UK potentially and become tax resident in Spain. Could you explain the sort of rules that determine tax residence in both countries, and then the implications of becoming tax resident in Spain?
Yeah, so to become a tax resident in Spain, you would do so in 3 scenarios. One is if you spend more than 183 days in a tax year here in Spain. Now, a tax year in Spain runs from the 1st of January to the 31st of December. And so if you spend more than 183 days in Spain in any year, and over that calendar year, then you would be regarded as a resident or a tax resident of Spain. Scenario 2 is where you have what's called your economic interests in Spain. So that would be whereby either your assets are primarily in Spain compared to assets that you have in other countries, or where, for example, your income comes from Spain, whether that's employment income in Spain, or it could be, for example, a hotel that you own a hotel and it's providing you with an income. Then the Spanish tax authorities would could regard you as a tax resident there. And then the third scenario is where they say it's the center of vital interest is Spain. So, for example, if you're married and your wife, as an example, is living in Spain, then they would regard you perhaps as the husband working abroad, but they could regard you as tax resident in Spain, despite the fact you might not be meeting the 183 days. Or if, for example, your dependent children, they're in school or they're living in Spain, then in that scenario, you could be a tax resident of Spain as well. But for most people, they come under the first rule, the 183 days. And so if you're spending more than 183 days in a calendar year in Spain, then you will be regarded as a tax resident of Spain. Of course, if you meet the tax rules in the UK, that's when the double taxation treaty comes into play, or the tiebreaker, and then you look to see which country would be the one that you're tax resident in. But for most people, I mean, that's very rarely used. For most people, if they're spending more than 6 months or 183 days in a tax year in Spain, it's very unlikely that they're meeting the UK tax rules, and therefore they're liable to tax on the worldwide assets in Spain. Sorry, Nigel, there's no sound.
Sorry, my stupidity, I didn't unmute myself. So yes, in terms of the UK, the statutory residence test, I believe, applies. So can you end up sort of tax resident in both countries, and how do you cease to be resident in the UK?
Yeah, so that's where, I mean, if you did meet the rules, and you're quite right, that is the rules for the UK. If you did meet the rules of both countries, then the tiebreaker does come in, and basically they'll look to see, where are the stronger ties. It doesn't come up very often, because typically if you are spending, if you've got a property in Spain and you're spending more than 183 days in Spain, it's very unlikely that you can therefore meet the UK rules. Sometimes I do get asked about the double taxation treaty. Surely that means that you can choose, if you meet the rules of each country. You get to choose where you want to pay tax and where you want to live, but that's not the case. The double taxation treaty is simply about the fact that you don't pay the tax twice. It doesn't give you the choice of which country you are a tax resident in and where you pay tax.
Right. Okay. So when you move to Spain, when do you start paying the tax? I mean,
yeah, that's a good question. So it really does depend on when in the year you move to Spain. So if, for example, you move to Spain on, say, the 1st or 2nd of January, then you will be a tax resident from the 1st of January that year. If you move to Spain, say, in the second half of the year, and as a result of moving to Spain in the second half of the year, you don't complete 183 days in that tax year, including holidays perhaps before you move to Spain in that year, then you will not become tax resident until the 1st of January the following year. And so, I mean, it's quite important to understand this, because what you don't want to do is say, do something which could incur a tax liability in Spain without you realizing, because you do something in January, you sell an asset in January, perhaps as a UK tax resident, and as a result of that, there isn't tax to pay in the UK. You move to Spain, say in February or March, and as a result, you're actually Spanish tax resident from the 1st of January that year, and therefore the asset that you sold, which you thought was not liable to any tax, turns out to be liable to tax in Spain. So timing your move to Spain is very important.
right. So you can you therefore be resident in both countries, and that's where the double tax treaty comes in, is it? Yeah.
That's right. So in effect, you can be resident in both countries, but you can't be tax resident in both countries. And so if you meet the residency rules, that's when the tiebreaker will work out which country you're tax resident in. Like I said, if you're meeting the 183-day rule, you've got a property here, the likelihood is that you would need to get specialist advice if you met those conditions in both countries. But in most cases, I come across, people that the intention is to become residents of Spain and to live all year round, or at least the majority of the time in Spain. They will be regarded as a tax resident of Spain.
Right. And so once you become a tax resident, you pay tax on income in Spain. What about income from outside and other assets?
Yeah, so this is very important to understand this, because it can be a bit confusing. But everyone who becomes a resident or tax resident of Spain must appreciate that they therefore become liable to tax on their worldwide assets in Spain. So it's not about where is the income paid to or where the income comes from. It's all about where are you tax resident. So if you are a tax resident of Spain, then you become liable to tax on your worldwide assets, income and assets in Spain. There are a few exceptions, and I'm sure we'll cover those through the duration of this webinar. But for the most, you're going to be liable to tax in Spain, and therefore it's very important you understand what the Spanish tax rules are on those assets, whether they're in the UK or anywhere else.
Okay. So when you move to UK, do your UK investments remain liable for tax? I'm just asking.
So if you've got investments in the UK and you're living in Spain, then we would need to see what those investments are. But yes, they would typically give rise to tax in Spain. If you encash those investments in the UK as a Spanish tax resident, they could give rise to capital gains tax in Spain. If you're taking an income from those investments, that income, whether it's being paid to Spain or being paid into a UK bank account, are likely to be liable to tax in Spain.
Yeah. And there are tax advantaged investments such as ISAs and premium bonds in the UK. What happens to them in terms of the UK? Can you retain that tax benefit?
You can certainly retain the assets. When it comes to ISAs, once you're a resident in Spain, the UK will no longer allow you to add to those ISAs. But you can retain those. But I'm afraid that the reason they're tax efficient in the UK is something that HMRC has agreed on, with the British government. But that's not the case in Spain. So any winnings from premium bonds will be liable to tax in Spain. Any dividends or income from ISAs will be liable to tax in Spain. So they are not tax efficient for Spanish tax residents.
Right. Okay. We've got a few questions, so perhaps we take that at this stage so that they don't build up too much, as we found in some other sessions. It says, as a Spaniard moving permanently back to Spain with my British husband after 24 years here, I will continue to work remotely as a sole trader, freelancer for a UK company. Can I pay tax solely in the UK, or do I have to declare in Spain?
Wow, that's some question to open up with. So sole trader, Spanish national, going back to live in Spain. Well, it's not one that's really easy to answer on here. They would need to speak to a local gestor to where they're moving to. I mean, one thing to bear in mind with Spain is that there are 17 autonomous regions. So each region has its own variation on taxes anyway. So it would be useful to know in which part of Spain they would be moving to. I would say that if they send me an email or contact you, I can then look at that question in a bit more detail.
Okay, thanks. The next one, I don't think they're going to get any easier for you. I'm due to retire from nursing in April, and I've paid into a UK superannuation scheme for 40 years. I'm due a tax-free lump sum. When will be the best time to move to Spain in order they don't pay tax on this amount, which I should receive in April?
Yeah, that one's actually an easy one to answer. So as a UK tax resident, the pension cash lump sum is tax-free, but it is liable to tax if that's taken as a Spanish tax resident. So the key there is to ensure that you take that income, which I think was in April, in a tax year that you are a UK tax resident, or at the very least, not a tax resident in Spain. So my advice would be that you would take the income in April and you wouldn't move to Spain until the second half of this year at the earliest, and ensure that if you spent, say, a month in Spain on holidays already, or by the time you move to Spain, make sure that when you include that time and the rest of the time to the end of the year, that it's below the 183 days. So if, for example, the plan is to move to the second half of the year to Spain, so from, say, the 1st of June onwards, and you spent 2 or 3 weeks in Spain already as holidays up until June, don't move to Spain until, let's start that again. You shouldn't move to Spain until the second half of the year, which would be the 1st of July. So if you're then going to spend a few weeks in the first 6 months in Spain, I would then say, look, don't move to Spain until, say, the 1st of August. If you've not spent any time in Spain this year, then from the 1st of July onwards, you'll be okay to move to Spain, and therefore you'd be tax resident in Spain from the 1st of January 2024.
Yes, and an important point there. Don't forget the holiday you spent in
Absolutely. They will look at the whole calendar year, and they will look at all the days that you've been on holiday in Spain that year as well.
Yeah. Okay, so this one, under the upcoming digital nomad visa scheme, it suggested that a flat rate of tax for the 5 years of 24% would apply. Is this a flat rate on all income, or are there tax-free allowances as in the UK?
Right, okay. So look, 2 things to bear in mind about this digital nomad. There's been a lot of talk about this for many years, and it's finally been passed. It's come into fruition. But that's only in the last few weeks. And so, we're still looking at the details of this. But what in effect it's done, it's allowed people who work online. So anyone that works online So prior to this, there were two visas. There's two ways to become residents of Spain since Brexit. The golden visa, which is to buy a property of more than 500,000 euros, and the non-lucrative visa. But the non-lucrative visa didn't allow you to work. This visa's come in whereby people who work online for an entity, a non-EU entity, so it could be a company in the UK, can move to Spain on a visa for 1 year, which can be renewed to an extension of 5 years. And one of the advantages of it is that the taxation of income is being treated as under the Beckham rule. And the Beckham rule basically says that you only pay tax on income that you bring into the country. So it's not a case of if someone's under that rule, from my understanding, like I said, the information's only just come out, is that the only income that you're liable to tax at that rate is on the income that you bring into the country. Anything outside of the country isn't liable to Spanish tax.
But are there any personal allowances, I think, that you offset before the flat rate, or is it flat rate on the total income?
If there is a personal allowance that's applicable, then that's typically around 5,550 euros. So it may be that there's a personal allowance, and if it is, that's what it is. And if not, then I mean, it's not a big allowance in a way.
No, okay. And one thing to bear in mind, as we covered in an earlier session today, the rules have come in, but there is actually as yet no arrangements to apply for it. So there's no infrastructure in place. So they haven't yet set things up. So it
could take some time.
It's in theory live. Yeah, it's in theory live, but in practice you can't apply for it. So it'll be a little while yet. But anyway, that's that one. So do you pay tax on savings in UK banks?
Yeah, so if you've got bank accounts in the UK earning you interest, which until recently very unlikely, but nowadays you can earn some interest, then that interest will also be liable to tax. It wouldn't be liable to tax in the UK, it would be liable to tax in Spain if you are a Spanish tax resident.
Okay, so this next one, what's the minimum pension or income you can earn before paying tax? And the answer you gave was 5,500, is that correct?
Yeah, so for a number of years now, it's been 5,550 euros. Like I said, there are 17 autonomous regions in Spain, and each region can vary. And from my understanding, for example, in the Valencia region, and we're just waiting for confirmation of this, they proposed before Christmas to increase theirs to 6,000 euros. Not a big increase, but slightly better than 5,550. So the typical allowance is 5,550. There are some potential increases on that as you get older, when you get to, I think, 70 and 75, but it's nothing major.
Okay, let's move back on to things, because some of the questions I have there, I think, will be answered as we go through. So should people start planning financially before they move to Spain, or wait until they get here? What sort of things do they need to consider before making the move and becoming tax resident? What are those sort of pre-move issues?
Yeah, well, I think even from what we've discussed so far, bearing in mind that your assets where they are going to be liable to tax in Spain, and you might have things like ISAs and things like that which are no longer tax-free, or a UK property which is your main residence, and therefore if you sell it as a UK tax resident, there's no capital gains tax. But if you sell it as a Spanish tax resident, could give rise to capital gains tax in Spain. But for most people, it's definitely worth planning ahead and looking or talking to someone like ourselves and looking at your assets and how you hold them now, and what's the best way to structure those to minimize taxes in Spain. And if you're going to do that, then I say the more time you've got before you move to Spain, you start planning this, the better. So I mean, we get people coming to us 3 years, 4 years in advance. Most people come between 6 months and 18 months. And that gives us time to look at what are the solutions to minimize your tax liabilities, what needs to be done before you move to Spain. I mean, as I said, we've got local offices in Spain, so we get people that have already moved to Spain, and we can see what we can do at that stage. Much better if you're thinking, or if you believe that there may be some restructuring involved, much better to look at that before you move to Spain than after.
Okay, and so when people move to Spain, will the tax systems be very familiar in terms of, so very similar to the UK, or are the taxes that they will be unfamiliar with, or the rules, very different or whatever?
Yeah, so I mean, some are similar. Income tax, naturally, okay, we talked about an allowance, it's lower than what it is in the UK, but it works along the same lines, that you add up your total worldwide income, and it then becomes taxable in Spain, starting at, depending on which region, but 19.5% and goes up. So similar to the UK. If you sell an asset, then there's invariably potentially capital gains tax if there's a gain on that asset. So that's something that you would be familiar with. The ones that you need to bear in mind is wealth tax, because in Spain, they add up your total worldwide wealth, and you pay tax on that, regardless of whether the assets are going up or down, or whether it's generating an income. And that's quite unique. We don't have something like that in the UK. There was talk of the UK potentially introducing something along those lines during COVID time, but as of yet, that hasn't happened. And the other one that's worth bearing in mind is something called Spanish inheritance tax. So you've got UK inheritance tax, but the real difference with Spain is that actually there is liabilities in most regions of Spain of tax between husband and wife. So in the UK, there's no liability to UK inheritance tax on first death between husband and wife, married couples. And then there's quite a sizable allowance before other beneficiaries pay tax. In Spain, there is a liability between married couples, albeit different regions have variations and reductions and allowances. But it's something that you need to be aware of and to plan for, either before you move to Spain or once you're in Spain.
Okay, thanks. And are taxes in Spain generally higher or lower than the UK? What should people expect?
Yeah, well, I genuinely believe that taxes in Spain are higher than in the UK. I've been paying tax in Spain now for 20 years. But what I would say is that for the majority of our clients that are living here, we're able to structure their situation. So actually they end up paying less tax in Spain than what they would do in the UK. So there are structures and solutions which help alleviate the tax burden that can minimize the tax here. And also I think that actually over time, what we're seeing in a way is tax rates increase in the UK in a way. So yeah, overall, I would say taxes are higher in Spain, but if you can structure things correctly, you can end up paying less tax in Spain than what you would do in the UK.
Okay. And in terms of the wealth tax, could you just give us a little more detail about how that works, and are there any ways to avoid it?
Yeah. So wealth tax is literally a tax on someone's worldwide wealth. And the good thing is that there are quite sizable allowances. So at the state level, you've got allowances of 300,000 euros per person for your main residence. And then you've got a further 700,000 euros on other assets before you pay wealth tax. So typically, a married couple will have allowances of around 2 million euros before they pay wealth tax. And then when you start paying wealth tax, it starts at anything above that at around 0.2 or 0.25%, again, depending on which region of Spain you live in. So, typically for many people, they don't pay wealth tax. But if you've got assets of in excess of €1 million per person, then you can potentially pay the wealth tax. There are solutions to minimize it. It's quite complicated to talk about on here. I think that if you are in a position where you've got assets of more than €1 million or close to that, then it's worth contacting someone like ourselves at Blevins Franks, and we can look at your assets and look at how to minimize that wealth tax.
Okay. Now, many people will have had UK advisors for many years, and obviously post-Brexit, the sort of rules and regulations have changed. What are the arguments in terms of having a UK-based advisor, or should they consider, once they move abroad or prepare to move abroad, that they consider different arrangements?
Yeah, I mean, this is always a tricky one, because it could be that you've got a UK advisor that served you very well for many years, and become close to or become friends with. Before Brexit, UK advisors could advise on residents living in Europe because under the EU rules, you had free movement of goods and services, including financial services. With the end of the free movement of goods and services also meant the end of financial services. And that's why, for example, there's been much coverage about, for example, Barclays telling people who are living in Spain that have got Barclays accounts in the UK, have been clients of Barclays for 40 plus years, are being told that they can no longer have those accounts. So post-Brexit, a UK advisor shouldn't be providing advice to someone living in Spain, France, Portugal, Cyprus, the jurisdictions that we work in. But I would say actually that, even before Brexit, the advice would be that really you shouldn't be using a UK advisor anyway, because it's very unlikely that UK advisor is going to understand what the tax rules are in, for example, Spain, and keep up to date with the tax changes each year and the changes in regulation. So, whether it was before Brexit or after Brexit, I'd be saying in the same way that if one of my clients who are living in Spain moved to, I don't know, Brazil, I would say, look, I can no longer provide you with advice. I don't understand the tax rules in Brazil. So it should be the same with a UK advisor advising their UK clients who are moving to Spain. You're going to get, I believe, much better advice from someone who's living in the country that you're going to be living in and has been involved in, immersed themselves into the life and the tax systems and understand in detail the rules and the changes that have been occurring over the years and continue into the future.
Right. Okay, thanks. So moving to the sort of financing of retirement, many people will be doing it out of private pensions, investment income, and so on, also the state pension. In terms of the state pension, I'll just cover that from personal experience. You can apply for, obviously, if you're already getting your pension in the UK and you're moving here, you can arrange to have the money sent to your account over here, or you can have it sent to your UK account and sent over. If, however, you are becoming a pensionable age after you've come to the UK, to Spain, you then have to apply to the International Pensions Department. Now, if you download the form that they have there, then they ask you, the opening question is, have you ever lived in the UK? They then ask you, what is every property you've ever lived in the UK? Who are all the employers that you've ever had in the UK? There is a whole series of questions that rather assumes you're sort of new, you've only spent a short period in the UK. It's a nightmare to deal with. So rather than do that, what I found is you pick up the phone, and there's a phone number at the IDP, and they will tell you, ask you just a few questions, just as if you're a normal sort of pensioner. They then put you into the system, and it will go through. On the other hand, they're very busy, as is many people these days. And for my personal experience was that it took me 3 months and I hadn't heard anything. So I picked up the phone, and they said, "Oh, well, nothing's happened to your application at all. Doesn't seem to have been touched. I'll put you on the urgent list." And 1 week later, it had all been sorted out. So pick up the phone. It's by far and away the easiest way to arrange the pension, and it's also the quickest way to get past any issues from my experience. So that's it. I don't know whether you have anything to add on the state pension. It's
No, I mean, just one thing, that whether it's paid into the UK or in Spain, you've got to bear in mind that it will be liable to tax in Spain, regardless. And yes, I mean, my mother did the same thing. My parents came out around 15 years ago. She got to state retirement age a few years ago. She did exactly the same thing. She phoned them up and she did it over the telephone, and it did get sorted out, albeit fairly quickly.
Yeah. The other thing to mention is that if you move to, I think, places like Australia, Canada, and so on, the pension does not increase. The state pension does not increase, and therefore gets whittled away by inflation over time. Under the withdrawal agreement, we do get the inflation increases, so get the same increases you would do in the UK. Obviously, there's no guarantee that that will stay there forever, but it is enshrined in the agreement and so on. And so it should be reasonably safe for at least for a while.
Yeah, and actually on the website, www.yougov website, previously, or a year or two ago, it did actually say that it was in place, but that it was going to be reviewed in a couple of years. I actually had a look at the same site today, and the bit about the review has been taken away, and it does say that you are entitled to the increase each year.
Yeah. Okay. So that's the state pension. So if people have a private pension, obviously, circumstances would differ, but generally speaking, should they leave it in the UK, or should they transfer it into a different structure or into Spain?
Yeah, so that's quite a big question in this, because there's a number of things here. So if you've got a UK pension, it could be what's called a final salary pension, where when you reach retirement age, you can get a regular income. It's not based on a fund value fluctuating. In that situation, you would typically keep that. If you wanted to transfer it, you would need specialist advice. But for most people, the best thing is for them to keep that pension and draw down on that income. And of course, if they're living in Spain, they'll pay tax on it in Spain on the income. If you've got a pension which has got a fund value, then you can keep that pension in the UK and draw down on it. But the problem that you've got post-Brexit is that no UK advisor can advise you on that UK pension, because you're now living, or you will be once you're living in Spain. But no UK pension provider will accept advice from an EU advisor, or in most scenarios won't, because they don't know about the regulation of the advisor in Spain. So it's quite a contentious issue at the moment, which wasn't dealt with the withdrawal agreement. What some people are doing is that they are transferring their pensions before they move to Spain from a UK pension to an EU pension. The advantage of that is, firstly, as an EU pension, it's not liable to the wealth tax that we spoke about a little bit earlier. You can keep the money in sterling, but you can switch within that into euros at some point in the future if you wanted to. So you could then receive a euro income. So you're no longer, whenever you hold money in a different currency to what you're spending, there's a currency risk. So if you're living in Euro land spending euros, you're not affected in that way. So there are advantages to transferring from a UK pension to an EU pension, but you would need to do that before you move to Spain. So again, in relation to one of the questions you asked earlier, should people contact, say, Blevins Franks before moving to Spain? I would say yes, that's very important. And what we can do is provide what we call a strategic financial plan. We can look at someone's circumstances and look at what are the steps that need to be taken before moving to Spain. And one of those would be we've got pension specialists that can look at your pensions and provide you with best advice on those pensions based on the fact that you're looking to live in Spain in the future.
Yeah, obviously, with circumstances vary from one person to person, there, I guess, is no universal answer in terms of the best.
Absolutely. Everyone's circumstances are different, their objectives are different, and so we need to look at that on a case-by-case basis.
So the question here, is it cheaper to have your pension paid directly to a Spanish bank or not? And I guess that's more of an exchange rate issue.
Yeah, I mean, if you get it paid from sterling directly to a Spanish bank, then you're at the mercy of the Spanish bank's exchange rate, and they're not going to be good, say, using then compared to maybe some currency company. The advantage of having it monthly is that you're getting, say, the exchange rate over the year, the average. Some people prefer that. Some, they get it paid into a UK bank and then transfer it over as and when they feel the exchange rate is good. There's advantages and disadvantages of both.
Right. Okay. So another question here. I read somewhere that if you have a local authority pension, it will only be taxed in Spain. But if you are a Spanish national on the same pension, then that will be taxed in Spain. Is this correct? That's a bit confusing.
Yeah, if you are a British national and you've been working for the civil service or a local authority there, and you move to Spain, you're liable to tax on your worldwide assets in Spain, but there are some exceptions, and one of those is civil service pensions or local authority pensions. And what would happen there is that they would remain liable to tax in the UK, and you would have your UK allowance, but your other assets, your other income, your UK state pension would be liable to tax in Spain. But you would have your Spanish allowance as well. So, for example, my father worked for the prison service for many years. He has a state pension and a prison service pension. That prison service pension is taxed in the UK, and he has his UK allowance, and his UK state pension is taxed in Spain, and he has a Spanish allowance.
Great. Another one here. My wife has no income. Can I use her tax-free allowance for my tax claim as in the UK?
Yeah, so you could do a joint tax return and utilize that allowance, yeah.
Okay. Do you stop being a tax resident of Spain immediately you spend less than 183 days a year?
Well, that's a good question. There was three scenarios that we said at the beginning. So if, for example, you've been tax resident in Spain for a number of years because you've been meeting 183 days, and you leave Spain and stay in the UK as an example, or somewhere else for work, and your wife and children are still in the residence in Spain, then you would remain a Spanish tax resident. So really what you've got to do is make sure you don't meet any of those three scenarios: 183 days, the centre of economic interest, and a centre of vital interest, in order to no longer be tax resident in Spain. But ordinarily, if you don't do 183 days in Spain, then you're not a tax resident for that year.
Right. Another one here. I have a defined benefit company pension and a separate private pension. Are they taxed differently in Spain?
Any income from either of those or both of those will be liable to tax in Spain. The one that has a fund value could potentially be liable to wealth tax. The defined benefit that doesn't have a fund value once you start drawing income would not be liable to wealth tax. So they're liable to tax in Spain, not in the UK. One could be liable to wealth tax and one not, because it won't have a fund value.
Right. Okay. So let's move on now perhaps to property. Many people will retain their UK property when moving to Spain. What are the implications of that from a tax perspective if they decide then to sell it later on? Yeah,
so I mean, some people do retain their property. They like the idea that in fact, my parents did. So when my parents moved to Spain, my father was kind of, done and dusted with the UK, happy to get out. My mother still, my sister is in the UK, grandchildren in the UK. She wanted to keep kind of one foot or the possibility of being able to go back. So they kept the UK property. The problem was when they chose to then sell that some years later, because as your main residence, when you're a UK tax resident, there's no capital gains tax to pay on that property. But if you move to Spain and buy a property in Spain and become a resident of Spain, then that property in the UK is no longer your main residence. And so if you sell that property whilst a tax resident in Spain, then the gains since inception on that property will be liable to capital gains tax in Spain, which starts at 19% and goes up to 28%. It was 26%, the highest rate, but there's now, as of this year, there's now a 28% rate. So for a lot of people that are looking to move to Spain, if they're pretty adamant that they're going to make a go of it here and they're going to spend a number of years here, they'll tend to sell that property before they move to Spain whilst they are UK tax residents, because then there's no capital gains tax. Of course, if there isn't, if you've only bought that property in the last year or two, as an example, and there isn't much gain on the property, then that's not an issue. Or alternatively, if there is a big gain, what some people may choose to do is sell that property, buy another property, so they're restarting the capital gain. There is no capital gain in the new property. They've bought a property, and then if they move to Spain and they do choose to sell it, it's that new value, that new purchase price that's taken into account for capital gains tax.
Right. Okay. Thank you. And then what about the income side? So if people are letting out their UK property and gaining rental income, where is that tax, and what are the implications of that?
Yeah, so this is one of the kind of exceptions. So when I said that once you move to Spain, you're liable to tax on your worldwide assets in Spain, but there are a couple of exceptions. One of those was the local authority pensions that someone asked a question on. And the other one is what you've just described there, is where you've got a property in the UK and it's providing you with a rental income. What would happen in that scenario is that rental income will remain liable to tax in the UK. You will be able to use your UK allowance against that. But you will need to declare that income also in Spain. But in Spain, if you have rental income and it's a long let, and a long let in Spain, there's no precise definition of that. But what they mean here is not kind of a week's holiday or a month's holiday. So anything, I think, longer than not certainly longer than a month, they'll treat 60% of that income as not liable to tax. So if you've got a long let rental property in the UK, declare that income in the UK, you have your UK allowance. You'll need to declare 40% of that income in Spain. They'll calculate what the tax is due on that, but they'll then offset any tax that you've paid in the UK on that. So for most people in that scenario, they don't tend to pay any tax in Spain, and they only pay tax in the UK after their allowances.
Okay, thank you. And so are there any other consequences of sort of keeping a property in the UK?
I don't know about financial. I mean, if they keep the property and they rent it out, then we've kind of described what the liabilities are. The property would be liable to wealth tax as well if your assets are over those allowances that we described earlier. If you sell that property later on, then it's going to be liable to capital gains tax. They're the main issues. I mean, non-tax issues, what my parents did, they rented out the property, and the first tenant was very good, but then they had a second tenant, which just turned out to be a disaster. When you've got a property that you rent out, you can go and see that property and speak to the tenant. It makes things easier than living in a different country and hearing about things being broken or rent not being paid or issues with the agencies. I find that with clients that do retain UK properties, it's not long generally before they sell the properties. They find that after the tax and the hassle and the income isn't that great, and if they're going to stay long-term in Spain, then they tend to want to eventually get rid of the UK property.
Yes. Personally, I was working in America for a period, and our home back in the UK was rented out. Sadly, in the middle of a divorce, both parties felt the other one should be paying the rent, and so neither of them did. Sadly, the agent was not up to getting the money back for us. So we rented it out for something over a year and got no income whatsoever from it, which but many people have good experience and so on. So that's not the only result, part of potential. Let's then just cover inheritance tax. What are the inheritance tax rules in Spain? I think we should perhaps also touch on the inheritance rules in terms of forced succession and things like that as well. But obviously, the tax and the rules are separate things.
Yeah, so in Spain, then you've got what's called Spanish succession laws and Spanish succession taxes. Now, under Spanish succession laws, in Spain, you can't actually leave your assets to who you want. So in the UK, typically you do a UK will, you put down who you want the assets, who you want to benefit the assets, and that's followed through. In Spain, it doesn't work that way. When you have an estate, what actually happens is that a third automatically goes to the children. A third can be passed to someone for a life interest and then passes to the children. And a third you can leave to who you want. So when you have a married couple in Spain, those worldwide assets, if jointly held, invariably the husband or wife who survives actually doesn't inherit much of the assets. Now, it passes to the children. Now, because you've got these rules across Europe, which are very different, the EU introduced rules in 2015, which said that if you elect so before you die that you want the laws of your home country to apply, then an EU country must follow those. So if you're British nationals living in Spain and you want to leave your assets to each other, for example, then to the children, then you would need to create a Spanish will stating that you would want the law of your home country apply, which the UK law is that you can leave your assets to who you want, and then you would put in the will who you want to benefit from the assets. So that's the way to get around the Spanish succession laws. That doesn't get around the Spanish succession tax. The Spanish succession tax arises in two situations. One is the recipient of the asset resident in Spain, or two is the asset physically in Spain. So if you've got a married couple and they are living in Spain, they've got a property in Spain, they've got assets outside of Spain, and one dies and they leave the assets to each other, because the survivor of the two are residents of Spain, they are liable to Spanish inheritance tax on their worldwide assets that they inherit. When they then die and the assets pass to, say, the children, and the children live in, say, the UK or outside of Spain, then the assets which are physically in Spain are still liable to Spanish inheritance tax because they're physically in Spain, but the assets that are outside of Spain are not liable to Spanish inheritance tax. So there are things that can be done to minimize Spanish inheritance tax, but you've just got to bear in mind that there is potentially liabilities between husband and wife. And the reason I'm pointing that out, or married couples, is because in the UK, there is, on UK inheritance tax, there is no such liability. Now, as I said, there are 17 regions in Spain, and each region have their own variations of those rules. There's some regions where now there are significant allowances, so that there isn't really any Spanish inheritance tax between married couples. There are multiplications involved as well. So for example, married couples in some regions, the tax is hard. So it's definitely worth looking into this before you move to Spain, to look at what the rules are in the region that you're looking to live in. But bear in mind that these rules in each region can change in a way. So if there is things that can be done to minimize this tax so that it doesn't really matter what the rules are, more the better.
Okay, well, thank you. I think that covers things, but there are a few questions outstanding which we have to cover now. One, this is going back to the property, but it's fairly specific, I think. If you sell your UK main residence and then move to Spain in the same calendar year, do you pay CGT?
You could do. I mean, that's where the timing is very important. If you sold it in, say, January, February, or March, and you moved to Spain in April, May, or even June, and you do that 183 days in the whole of the year, you will be regarded as a tax resident of Spain from the beginning of that year, which is, ironically, you moved to Spain after you've sold the property, but if they regard you as tax resident from the beginning of that year, the year that you sold the property, then it can give rise to capital gains tax in Spain. So in that scenario, what you would want to do is make sure that you move to Spain in the second half of that year at the earliest, so that you become a tax resident the following calendar year. So if you've sold that UK property in the year prior to becoming tax resident in Spain, calendar year tax resident in Spain, then you would avoid the capital gains tax.
And the tax is gained on the gain from when you bought it, rather than any apportionment for the period you spent in Spain. Yeah.
Correct. It's based on, how much did you buy that property for in whatever, 1994? How much do you sell it for in 2023? That's the gain.
Um, so there's a question here. What is the cost for strategic financial plan? Is there a minimum amount for people to have to make this worthwhile?
Yeah, so I mean, look, for a lot of people that are moving to Spain, we do, as I say, sit down, we would look at their assets and income and come up with a strategic financial plan. What needs to be done before becoming a resident of Spain? And then how do we then provide the ongoing service? As to the cost of that, really does depend on how much work is involved. So what I would say is that if anyone is interested in doing that, what we would do is have a conversation, get a full picture of their assets, income, objectives, and then say, right, we can do all the work on this, and the cost of that would be this, and then you choose whether you wish to pay that or not. And if you do, we would then do the full work on that.
Yeah. There's another question which you sort of partially answered there. On average, what is the cost of financial advice in Spain, and is it tax deductible? Now, clearly the amount is going to depend entirely on what work is involved and so on, but is it tax deductible, I guess?
It depends what work is involved, because, for example, if it is involving solutions whereby the fees can come from those, then there is no tax, there's no VAT on those. And typically, when we're doing the strategic financial planning reports before moving to Spain, the idea is that you do these reports in a tax year before you move to Spain, so you wouldn't deduct those taxes from a Spanish tax return in a way, because that's all taken care of before you move to Spain.
Okay. And can you give any indication on the cost of doing a Spanish will? Is that?
I think they're pretty cheap. I mean, you can go to the notary directly and do that. And that's probably, a couple of €100 maximum. Or you could find a solicitor here in Spain that would do it, and they'll charge you probably a couple of €100 more to do it. So it's not expensive in the same way that tax returns generally are not expensive. You go to see a gestor here, and it's a tax return once a year. We haven't even talked about the overseas asset declaration, the Modelo 720, which is another thing that needs to be done. But when it comes to a tax return, it's 100, €150 a year to do a tax return. But just remember that they're data inputters here. They're not going to give you tax advice. They're not going to say, well, if you do this, this, and this, you can minimize the tax. That's where you would speak to someone like ourselves to be able to provide that advice.
Yeah, okay. Another one here. We placed our holiday home in my name only due to taxes. My niece and nephew inherit. They both live in the UK. We made a Spanish will to reflect the UK will, and the UK will does not conflict with the Spanish will. Is this okay? Does that make sense?
Yeah, so typically, if you in that situation, you would do a Spanish will that deals with your Spanish assets, you do a UK will that deals with your UK assets, you're leaving the Spanish assets to, I think you said a niece or niece and nephew, no problem there. Of course, there will be those Spanish inheritance tax payable on that property. When we talk about Spanish inheritance tax, they look at first of all, where is the asset physically in Spain? Yes, so it's going to give rise to Spanish inheritance tax. And then what they do, they look at the relationship between the person that's died and the person that's receiving the assets. And there's kind of a class of beneficiaries. Class one is children, grandchildren, parents and grandparents, for example. Class two, I think, is brothers and sisters. Nieces, I think, that come under class three, which means that there's a possible multiplication when involved in the tax and a lower allowance, depending on which region that property is physically in.
Okay. Another question here. If you move and transfer all assets to Spain, then can you elect to have UK law apply to your will and avoid Spanish forced heirship rules if you apply for Spanish citizenship, or only if you remain a British national?
Yeah, that's a very good question. So I think that in that situation, if you get your assets out of the UK, then that in itself, you can still apply for under UK law. If you became a non-UK domicile, that could prove to be an issue. But what would normally happen in that scenario is Spain would allow you to leave your assets to who you want. The only potential issue is if someone was to contest that. They may be able to, through the courts, say, well, that person is no longer a UK national. They are a Spanish citizen. If that's what you've done the exams and everything. And that's not easy. My father-in-law is British, lived in Spain for 40 years, and has just got his Spanish citizenship after numerous exams in Spanish and tests on his knowledge of Spain. But in that scenario, it could be that the forced heirship rules could apply if someone was to contest the will. But it would need someone to contest the will in order for that to happen.
Okay. Is there any tax efficiency in charging contract income through a Spanish limited company?
Well, possibly. I mean, there's a number of things that you need to do there, because if you're moving to Spain, which visa are you coming under? If you're coming under the non-lucrative visa, you're not supposed to be working. So that could be an issue. That's not an easy one to answer here. Again, that would be something where they would contact yourself, Nigel, and then I can look into that.
Yeah, okay. So there are a couple of questions, but they're around the same thing, which is something we do here at the end anyway, and that is how they contact you. The first is, do you have an office in Catalonia?
Right now we don't have an office there, but the bad news is we don't have an office there. The good news is that you'll be dealing with me, though.
Is that good?
I'm based further down the coast, but I cover that area, so you'll be speaking to myself. Okay,
so in terms of getting in contact with you, which is the general question, broadly they can contact through me, expats@expatnetwork.com, or they can find the contact details on blevinsfranks.com. Is that not it? Is there any other way?
Yeah, so our website, www.blevinsfranks.com. I mean, there's quite a lot of information on there, podcasts, tax guides. There's a lot of information on there, but it also has where our offices are, and you can contact our local office through that means.
Okay. Well, thank you very much, Brett. Just to finish off by thanking everyone for listening, and for you, Brett, for doing. I know some of you are planning to make the move in the near future, but some are planning well in advance. In fact, one person has said they're not moving until 2030, so they're clearly thinking well in advance. As I've said before, we're here to help you. We have a network of people that can help. We don't provide any service ourselves, but we can normally find somebody who can help you. So if you do want any help or assistance, and if you want to contact Brett or anything, then expats@expatnetwork is the best way of contacting us. So thank you all for joining us, and good luck with your move abroad. Thank you, Brett.
Thank you, and thanks, Nigel. Take care now.
Bye.